Hi everyone, welcome to my YouTube channel, JK Tutoring.
So in this short video, we're going to have a look at accounting. Accounting involves making a record of the business's financial transactions, then preparing the set of accounts from this information, which is used to evaluate the business's performance. So financial transactions are actions by a business that involves money either going into or out of a business. For example, making a sale or paying a bill. So we're going to have a look at 5 different types of purposes of accounting. Number 1, recording transactions. Number 2, management of a business. Number 3, compliance. Number 4, measuring performance. And number 5, control of the business. So number 1, recording transactions. Now it's important for businesses to keep their business records accurate and up to date, and it's important for the smooth running of the business. The business owner must record all of the money coming into and out of the business. So think about this question: if a business fails to do this, who might they get into trouble with and why? So the answer is HMRC. If the business does not record their transactions correctly or accurately, it cannot report its financial performance accurately, and therefore tax payments may be wrong. This can damage the brand reputation of the business, and it can even damage the relationship with their stakeholders or shareholders even. Number 2, management of the business. A manager is responsible for the planning, monitoring and control of the resources for which they are responsible. A manager who clearly understands the business's accounts will be better able to make informed decisions and plan for the future. Number 3, compliance. All businesses have a responsibility to comply with financial reporting requirements in accordance with their laws and regulations to ensure investors and stakeholders are not misinformed. So it's all about transparency. And it also helps protect against fraud, so when an individual acquires company money for personal gain through illegal actions, again damaging the brand reputation of the business. And then we've got number 4, which is measuring performance. Now without these financial records, it would be impossible to know if the business was making a profit or a loss, or whether they're breaking even or not. Key indicators of financial performance include gross profit. So this is the amount of profit left after the cost of sales are taken away from the sales revenue. And then we've got net profit, which is the small amount of profit made after all the other total costs are deducted from the gross profit. And another way of measuring performance is value owed to the business. So this is the amount of money owed to the business from sales that have not yet been paid for. And then you've got value owed by the business. This is the amount of money the business owes to others for goods or services purchased but not yet paid for. So for example, raw materials from suppliers. Number 5, so the last purpose of accounting, control. Accounting will control the flow of money into and out of the business by maintaining accurate records and monitoring performance. Now this should mean that any unusual activity is spotted, helping to prevent fraud and to have a look at any anomalies in the data. It will also therefore track the amount of money the business is owed. So for example, trade receivables from the sale of goods and the amount the business owes, which is called trade payables. So it is really important for your exams that you realise and you understand the key terms. Now the 2 key terms in this slide is trade receivables and trade payables. So this will help ensure that the business can meet their day-to-day expenses.